The real difference between cloud and shareholders with the bankruptcy and going public seems evident to be the consolidation at the expense of members in an attempt to turn short-term into long-term liabilities as quickly as possible. It is emphasised in the press release from Lyoness that the bankruptcies only affect Lyoness Europe AG and Lyoness International AG, and that it would have no effect on the other active companies. On the companies maybe not, but on the members depending on where they stand. But what does this mean for the marketers who have accepted the MSP switch and those who continue to stick to their cloud? Is a split in marketers imminent, and what is Freidl's intended line? The cloud owners who hope for the so-called passive income and have no interest in an IPO are constantly being urged to agree to a conversion to MSP. It is the right of the cloud owners to insist on the fulfilment of the original agreement, even if the payment dates have always been postponed and financial surcharges have constantly been demanded. If you follow the various chat groups and see how they deal with requests from cloud owners who dare to ask for remuneration or payment, then you can speak of a two-class membership. Top leader, Marcus Kafer, in particular, is characterised by the fact that he does not respond to the questions of cloud owners, but condemns their tone and threatens to remove them out of the group. But is the MSP holder, internally called a shareholder, better off than the cloud holder? Not really. One just has little less of hardly anything than the other. There will not be an IPO anyway, as Freidl himself said. The shares are to be understood as an incentive, and there are no guarantees with shares in any case. When the members switched to shares, something else was advertised to them. Previously, Hubert Freidl communicated in a full bodily video that stock market experts from Deloitte allegedly agreed that my world would be worth several billions in a few years. The charts produced and published by Lyoness itself year after year, where the chart curve is presented with steep exponential growth showing unbelievable increases in customers and cooperative companies, can now only be seen as an absurd misrepresentation. So what is left for the My World shareholder? My World International AG would first have to make a profit, which is not to be expected at the moment. First of all, the shareholder should be aware that what he or she calls their own as a share is not freely tradable. The shareholder requires the approval of My World, and a counter value is neither recognisable nor rudimentary on the balance sheets to the extent required. Any comparison with shares on the free market is out of the question, because there is no official trading platform for the My World share. Therefore, these share certificates will only be able to be offered internally at My World International AG, or the non-official subsidiary Block Trade will concoct something and call it a trading platform, which must also be classified as worthless. Because so far they have not come up with anything more than self-paid images, articles in trade journals. So what happens next? It seems evident that Freidl's intention is to eliminate Lyoness Cloud members that refuse to accept Lyconet or My World subsequent terms and conditions and or the IPO with bankruptcy. These are members who simply don't want to pay more money into the legally declared pyramid scheme, because Lyoness AG and Lyoness International AG certainly will not pay out a passive income. It would not be surprising if the cloud owners were now being put in bankruptcy and the numerous different general terms and conditions and agreements were cited as the reason. We also draw attention to the fact that Lyoness Europe AG and Lyoness International AG were registered as shareholders in many companies. Cloud owners are inconvenient for Freidl because they no longer invest any money in the scheme. So what could be more obvious than to deceive non-conforming Lyoness members with a legal sleight of hand? Please share the information regarding the bankruptcies of Lyoness AG, Lyoness International AG, to enable all aggrieved Lyoness, Lyoness, MyWorld parties worldwide to have the opportunity to join the largest collective litigative action being represented by BE Conflict Management's European Economic Interest Grouping with respect of Hubert Freidl and responsible Lyoness, Lyoness and MyWorld group companies.